What's going on, guys? It is the Bulls and the Bears here with a weekly recap video. We're going to go over the Robinhood account, the wheel strategy, economic data, the S&P 500. We're going to do it all. We're going to see what happened this week and wrap it up and a good summary here. So starting with the Robinhood account, get you in a little closer there. There we go. So here's the one-day look. This is my Friday to close the week. I lost about $20. Look at the week as a whole, down $290. So a rough week. Started the week around 20,600, and we dwindled down mainly because of my JD position. We'll move over to the positions quick right here. My JD stock, 200 shares, down $308. And to start the week, I believe I was up like $100 or so. So I lost $400 from JD moving down this week. But through the wheel strategy, selling calls, selling puts, I was able to, not have the loss on the week be that bad. It wasn't like $400, $500. It was only $290. So that's where selling options and collecting that premium can really, help withstand some unrealized losses in the stock. But I'm not too worried about that because with the wheel strategy, we just hold it, we sell calls, and we wait for it to come back. So it'll have its time, just like it did last week, really. Just 1 week, not going to go crazy. If we look at the 1 year look, we are up $627, over 3% so far. So that's great. That is great. Just a bad week. That's all. So we're going to recap everything that happened with my positions. There was actually a lot of activity, so we will get to that. But first, we're just going to look at the market and look at this SPX chart, the S&P 500, closing yet again all-time highs. And we had some economic data this week. We had important jobs data. We had the Fed interest rate decision. That's always a huge one. And yet we finished on a strong note. Look at the weekly chart. This is, I think, the 13th green week out of 14. So 13 out of 14 weeks were up. And that stems from, really the end of October to now, which is nuts. We closed up over 1% in the S&P this week. We'll go to Market Watch quick to show you the economic data that took place. Friday, it was really just the Fed meeting on Wednesday, so they kept rates the same, and they sounded a little bit on the hawkish side, the cautiously optimistic side, where investors in the market are factoring in 5 to 6 rate cuts this year, which investors want to see. That'll be better for the stock market. But the way Powell's talking, the way the Fed officials are talking, they're factoring in like 3. That's where the Fed is at. 3 cuts, not 5 to 6 like the market is predicting. Things can change. The market is probably predicting more cuts because they assume that they just have a different outlook than the Fed does. They think that the Fed's going to eventually pivot and be like, yeah, you know what, maybe we will do 5 cuts because the data suggests it. That's what the market's predicting. But right now, what the Fed's saying and what the Fed is seeing, they're like, no, probably just going to do 3 cuts. So that was on Wednesday. That fluctuated the market. And then today was the jobs report. Right here. So it should be non-farm payrolls, but maybe it just says jobs report. We got a lot more jobs than expected. We got 353,000 versus expected 185,000. That's a lot more jobs. The unemployment rate was lower than expected. It was 3.7% versus what they thought would be 3.8%. And hourly wages was higher than expected, 0.6% month over month versus the 0.3%. And the year over year was 4.5%. I don't have the suggested or the anticipated one, but I know it was higher from other data I saw. So basically, the labor market, which the Fed wants to see cool down, they want to see unemployment go up. They want to see jobs, increase at a low rate because, if the job market's hot and we're all working and we're all getting raises and stuff, like that means we're going to be spending money, and that's going to stimulate inflation, and that's what the Fed doesn't want. So they want the labor market to cool down, and that's not what we saw here. We saw a very hot jobs data, and that's not good for those who think there are going to be rate cuts, because it can change, but right now it's still hot. So we'll go back to change the screen here. I guess I failed to get back to the normal screen when I went to trading view before, my bad. But if we go to SPY and go to the 15-minute chart to see the pre-market activity, you can see this was on the jobs data. It was way hotter than investors would have liked, so we fell quite a bit to start the morning. But in typical SPY fashion, we just rallied and went to the moon anyway. We had a pretty good buffer to start the pre-market because stocks like Meta last night or Thursday night went off, and they're a huge part of the S&P. So if something like Meta goes skyrockets, that's going to prop up the S&P 500 since it's such a big part of it. Another one was Amazon. That was another Magnificent Seven name that Thursday night that really went up. So as a result, SPY after hours on Thursday had a really nice rally, and that gave us a little bit of a buffer to withstand that jobs report drop. So we ended up opening pretty much flat, and then we rallied anyway. The actual Fed, though, the Fed meeting was this day on Wednesday. When it was announced that rates stayed the same, we went down. When Powell started talking, we went up. After he was done talking, we tanked. So a roller coaster ride, but doesn't matter. Like I said, we rallied to end the week pretty strong. So that's the S&P. That's the economic data. Now let's get into the good stuff, the wheel strategy. So we'll bring up the graphic here. January profits. The month is over. Obviously, it's February 2nd. But most of this last week was January, so I'm considering a January week since I play by the week instead of by the day by selling weekly options. $630.71 for January. Great way to start off the year, considering I didn't even start on January 1st or 2nd. I started like the third week of January. So I didn't even get a full month in, and I still got $630, which is excellent. You can see the breakdown on the side. $284 in put premium, $118 in call premium, $200 in stock profits, $33 in interest. Hey, that adds up. That counts. We'll be tallying that all year long. $33.71 in interest collected on my cash that I didn't put to work. And right now, Robinhood, if you have Robinhood Gold at least, it's paying 5%. That's a really, really good rate. That's subject to change. If interest rates go down, that's going to go down with it. So we'll see how that ends up by the end of the year. But right now, I'm collecting a pretty good interest rate on my unused cash, my buying power that's on the sidelines. So we're going to keep track of that and see what happens. I mean, it adds up. If I didn't collect that interest, I would be in the 500 range. You know, the interest is what got me into the 600 on the month. So it adds up for sure. But what happened this week exactly? The trades I made to get to 600? Well, let's talk about it. We'll start with JD. JD is, I hold shares of it, 200 shares, at $23.25, right up here by the blue line. And Monday was right here. So we opened the week nicely above my cost basis. So my shares were in the profit to start the week. And then we promptly sold off $2 this week, which is not good. That's like 9%, over 9% JD fell by this week. So that sucks. But I did have calls sold to start the week at the 25 strike. That was way up here. And as we sold off, trickle down, those calls decayed. And when I was up 90% on that premium, I decided to close it, buy it back, realize that profit, and then open new calls for next week. So I have those there. You can see sold 2 calls for next week for 25 cents a piece at the 24 strike. So it is lower than the 25 strike I had sold, but it is what it is. It's still above my cost basis, so I'm happy with that. Fits my rules, checks the boxes, and I collected a good amount of premium. It's $50 total set for next week, so that's a great start. The calls that I closed, though, this week, that was at the 25 strike, I sold those for 21 cents. No, that's last week. I was holding for 20 cents, and I sold 2 of them, so $40 total, but then I bought them back for 2 cents each and ended up profiting $36 on those covered calls. So it's a shame that the stock went down, but that's where selling calls can come in handy. You kind of offsets that loss and brings in income on an otherwise losing position. So that was JD. I have the call sold for next week too, so that's cool. Next we have Mosaic. This one, guess what, guys? Welcome in a new position. Mosaic, 100 shares of Mosaic at 31, because I sold the 31 strike. You can see by the yellow line. Collected 14 cents for the put, and we closed at $30.81, just below my put. So I am now a shareholder, a proud owner of Mosaic, 100 shares at 31. So that's nice. I collected $14 for the put. You can't take that away from me. I let it go to the end, obviously, because I'm assigned, and I get to keep that. So that was a $14 profit on the cash secured put. And then starting next week, I will own 100 shares at 31 and look to sell calls at or above my cost basis. This actually is not a bad spot to get assigned at all, because we're pretty much right at 31, which means it'll be no problem selling calls above that in profit territory, allowing the stock to appreciate and me get some gains on the shares as well as premium on the call. So pretty good way to get assigned. What really sucks is if you get assigned because the stock's like way down there, like 2, 3, 4, 5% below your cost basis. Having it close right here and get me assigned right here, only 19 cents under my strike, that's pretty favorable. So we will be holding those shares on Monday, so we'll look to sell calls there. Another one, that wasn't the only one, Marathon Oil. This one I also got assigned, just barely. This one was battling my strike all day, and I ultimately will get assigned. So the week started here. I sold the 22.50 put on Tuesday, actually. So I actually sold the puts around here. 22.50 strike, sold 2 puts, 17 cents each. And on the day that I sold the puts, we had a really nice rally. So I was like, cool, this might be a successful trade where they expire worthless. But then Wednesday to Friday, it just went straight down. And if I zoom in on Friday's price action, you will see exactly how we finished. Maybe let's go to the 5-minute. So literally down to like the last few minutes of the day, we tried to get back above the strike. We did by a penny, but then the last 5 minutes we sold off down to $22.46, only 4 cents below my strike. So hey, that means the put is in the money, and I will be assigned 200 shares of Marathon Oil at $22.50. And we were right there. We are right there. So again, like Mosaic, a very, very favorable spot to get assigned at, just underneath the strike. That way, I mean, my shares could be in the profit first thing on Monday if it just has a slight gap up. So it's a nice position. And then obviously I'll be able to sell calls, no problem, above my cost basis, allowing myself to possibly generate profits on the shares as well as the calls. So I'll be looking forward to doing that on Monday. So with Mosaic as well. So those are now 3 positions I'm in: JD, Mosaic, and Marathon Oil. And although I'm getting assigned, I still keep the premium on the puts. I sold 2 of them for 17 cents, which means I profited $34 on those Marathon puts. Other puts that I sold that I did not get assigned on include Bristol Myers. This one was an earnings play. Here's the chart, the daily chart. Scroll down here. I sold a put at the 46.50 strike, so it's decently out of the money, but it was because they had earnings this week, so the premiums were juiced up. I was able to get further out for a good premium. Sold 1 put for 24 cents, and it did have earnings Friday morning. This is that volatile action right here. It ended up gapping up, so it was positive earnings, and it moved higher, which is great. It did sell off once it opened, but the fact that it gapped up to start means that there was very little chance my put was going to get assigned unless it got absolutely crushed in one day. And it didn't. It did have a red day, or it sold off, but it didn't come close to the strike. I ended up actually not letting these expire. I closed them early because I wanted to roll that buying power into a new position. So I sold it for 24 cents, bought it back for 1 cent, just $1. So almost all the profit, 95% of the premium. So I ended up profiting $23 on that put, and now we can move on. CSIQ is the last one. So this one is what I rolled that buying power into from Bristol Myers. I closed it early. Usually on Fridays, I just let all my options go to expiration because it's just one day. I'm not going to really spend the money to close them if they're just going to expire literally in hours. But in this case, I did because I wanted to get a new position going on CSIQ while I had the chance. So for this week, you'll see two lines here. Don't get confused. For this week, I sold the $21 strike right here. And I sold that not on Monday, maybe on Tuesday. I sold the 21 strike, collected 10 cents. Very cheap, but given the amount of days the trade lasted and the cheapness of the stock price, it was 30% annualized return. So got 10 cents on that, and it expired worthless because it did not go to $21. It did come down a little bit, had a 4% down day today, but it did not close below 21 or even come that close, actually. So that expired worthless, and I profited $10 on that put. Now, what I did with the Bristol Myers Squibb buying power was I opened a new put on CSIQ today because it was having, like I said, 4% down day. And I have no problem getting back in this thing at these levels. As you know, I was just in CSIQ at $21. And if I can get back in below $21, that's even better. And I had an opportunity to sell a put below $21. I sold one at $20.50, so another 50 cents lower, and I collected $20 for it, which is great premium for the strike and for the amount of days in the trade. So that's what I ended up doing with that buying power. Now, what I really wanted to do was just close the CSIQ put, the one that was expiring this week, for 10 cents, close that, and then open a new one. So basically roll it out to next week and down 50 cents to 20.50. However, because of the way the options worked for CSIQ, it was minimum increments of 5 cents. I couldn't buy it back for $1. The minimum was 5 cents. And to buy it back for $5 when I only collected $10, I'm literally losing 50% of the premium to buy it back early. So that wasn't an option. I had to just let it go. So I decided to close Bristol Myers for $1, which I was allowed to do. 1 penny increments worked on that stock. So I just decided to close that and then open another put for next week, and basically had 2 puts active at the same time for CSIQ. But this one expired for the week, worthless, $10 profit there. And now I have a put open next week at the 2050 strike. Just one put. I can hold up to 200 shares of this, but I'm just going to start with one put for now because I am weary that this gap right here is going to get filled. And the fact that interest rates might stay higher for longer than expected, or at least than the market expected, I could see a little bit more weakness in this stock. So I'm just going to play it safe with one put for now. If it does want to fill the gap, it's going to move down even lower, and that'll give me an opportunity to sell another put at an even lower strike, $20 or maybe $19.50 or something. You know, just ease into the position with 100 shares at a time. I think that'll be a smart way to do it. And I'm set to possibly get into the stock at a better price than where I had it just 2 weeks ago. So got that going, and that's it, guys. So I'm in JD shares. You can see it on the bottom banner right here. I'm holding JD shares, I'm holding Mosaic shares, and I'm holding Marathon Oil shares. And I have a put sold on CSIQ for next week. So I already have some things going. I have calls sold on JD as well. So I already have 2 options active right now. A put on CSIQ and calls on JD. And then on Monday, I will look to sell calls on Mosaic. That will maybe the 31.50 strike. It's probably not going to pay a ton of premium, but I'll look to hopefully get above my cost basis. And then Marathon Oil, same thing. Look to maybe sell one at 23, hopefully, which is 50 cents above my cost basis. And that's that, guys. I will fill you in on what I do there. But to wrap up the video, I am going to show you the Excel file now that the month is over. So here it is. Here is the full logging of January. You can see all the amounts. They're small. Most of them are very small. The biggest one is obviously the CSIQ shares. Made $200 profit there. But everything else, aside from that stock profit, was under $50. Every entry is under $50, but yet they all add up to over 600. So these small winners add up. I'm telling you, just look at it. $17, $20, $18, $11, $18, $23, $23, $10, $14, like $12 in interest even. Like, they're very small, but when you have a bunch of them over the course of a month, it adds up quite nicely, $630. And here's the interest on cash. For some reason, Robinhood paid me twice. They gave me like an early payment, I guess, on January 25th for $21, and they paid me again on January 31st for $12.65. And then I factor in the Robinhood Gold membership because it costs $5 to get that 5% interest rate. So I do have to factor that in as a cost. So minus $5 for Robinhood Gold. But all in all, $630.71 on the month. That's over a 3% gain on the account. And now the question is, what do I do? Do I withdraw these profits from the account and put it in my wallet, my bank account? Or do I let it sit in the account to grow? You know, because if I take out $630, now the account's back down to $20,000 less my unrealized loss on JD. Or I could leave it in the account, leave it at $20,300 and just keep growing it and using those profits to reinvest into more stocks, bigger stocks, more shares, kind of accelerate that growth. You know how it is, compounding. It's a matter of preference. Initially, I thought I was going to withdraw the profits because that's kind of what I'm in the game for, is another stream of income, monthly income on top of the day job. Another $600 in my bank account would be really nice right about now. But at the same time, I don't necessarily need it. So for now, I think I'm just going to leave it in the account. And if something comes up where I want to take money out, I will. Like maybe I want to throw some extra money at my car loan or something. Or maybe I need to buy a gift or something like that. Whatever it is, I can just take some distributions out and pay myself. But until I need to do that, I think I'm just going to leave it in the account. But yeah, here's the month. And I started in week 3. You can see here, not week 1 or 2. So not even a full month. And it was a really good result. So that's the weekly recap. That's the monthly recap. That's January in the books. It was a great January. Let's see if we can keep it going into February. We are now going to start February with 3 stock positions. And I already have a put sold, as you can see here. Oops, here. I have a put sold in CSIQ, which is already up $7. And I've call sold on JD for next week, which is already up $28. So I already have, I think $70 total collected in the pipeline for next week. So if all of these options expire worthless, then I will profit $70. So I already have 70 ready to go. I'll try to sell calls on those other 2 positions, which will add to that income, that premium, and maybe sell another put on something else. So next week's looking pretty solid, but we will see how it goes. I'll come back with an update, maybe a mobile update, the weekly recap, all that good stuff. So if you want to see that, subscribe, and you will catch my videos when you go on YouTube. All right, guys, that's it. Thanks for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.